The following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
So it's Thursday, or Friday, or Saturday, whichever one you happen to be listening to, and we're going to be talking about money. Jack Ablin, who was the Chief Investment Officer of Harris Trust, now the Chief Investment Officer of BMO Wealth Management, wrote a book called Reading Minds and Markets. And in that book, he wrote the most recent experience, and he was talking primarily about 2008, 2009. The most recent experience should not call into question why we invest in the market, but rather it should serve as a lesson that investment is not always easy. Investing takes hard work, consistency, and objectivity. I believe that. It truly is. It's something that really describes a lot of what happens. By the way, BMO Wealth Management does not have the track record that I do, but that's another subject entirely. It still takes a lot of work. And over the years on the program, I've talked about the super cycle, talked about that period of time which from 1870 to 1913, the worldwide GDP grew faster than average, driven primarily by the industrialization of the U.S. 1945 to 1970, the second supercycle, again when the worldwide GDP grew faster than average, driven primarily by the rebuilding of Europe, the decolonization of the world, by the countries that had colonies. In the U.S., we saw the infrastructure, the auto routes, and the highway structure, the airports, and so on. And the next supercycle is it began in 2009 and will continue for a number of years. I've talked about that. I've also talked about a report that McKinsey and Company did showing that, and they did the report in 2007, showing that leadership companies today are changing 3 times faster than they did 30 years ago. But there's a lot of things happening in the world today. If you look, McKinsey did it just for the last 30 years, but Yale professor Richard Foster looked at companies in the Standard & Poor's. And those companies that were in the Standard & Poor's in 1920 averaged 72 years before they fell out of the Standard & Poor's. Whether it was Eastman Kodak, whether it was a number of those companies, 72 years they lasted. Today, it's getting to be 15 years. Babson School of Business out of Boston said by 2025, 40% of today's top companies will no longer exist. Think about that. By 2025, we're not that far away. We're less than 10 years away. 40% of today's top companies will no longer exist. They'll lose their earnings, they'll lose their markets, and 3/4 of the companies by 2025. 3/4 of the companies in the Standard & Poor's 500 will be companies that don't exist today. Think about the changes that are going on. Think about, and I've talked about this a number of times over the years, the 1966 blue chips, the ones that were part of the Dow Jones Industrial Average, 1966. It consisted of Anaconda Copper, American Can, American Tobacco, Bethlehem Steel, Chrysler, General Foods, Goodyear, Johns Manville, Owen, Illinois, Swift & Company, Sears, Texas Corporation, Union Carbide, U.S. Steel, Westinghouse, and Woolworth. A lot of those companies don't exist today. And if you just invested in those companies, you'd missed out on companies like Microsoft, Intel, Southwest Bell, Home Depot, Walmart, McDonald's, Costco, Starbucks, Genentech, Amgen. Some of those companies are in the Standard & Poor's 500, Cisco. Some are not there yet. It's easy to look back and see which companies have done well and which haven't. But the blue chips became black and blue chips. There was a time in which you could put away stocks in a drawer, hold them, and not have to look again. Those times are past. That doesn't mean that trading every 3 months or every 6 months gets you there. But it does mean that change is happening faster. In 1964, Peter Higgs, a British scientist, predicted the existence of a particle. Came to be known as the Higgs boson particle. Came to be known as the God particle. The only way he could explain some things in physics and in the physical world was this particle which he postulated must exist. He did that in 1964. But it wasn't until July of 2012 at the CERN particle accelerator, the one in Switzerland, that they really found the Higgs boson particle. Now, if the Higgs boson particle had not ever been found, had not found never to have existed, a lot of the theories about that we have at physics would have gone away. But the fact is, they found that particle. And in physics or chemistry or biology, there's physical laws that are consistent and constant. You know, economists would like that to happen in the investment world. Investors would. It just doesn't happen. There was an article out of Barron's that talked Dow 20,000, Dow 30,000. They're expecting 30,000 by 2025. It sounds really big, a 50% increase from 20,000 to 30,000. But you know what? That's only an increase of 4.62% every year. Just a little over 4.5% growth every year. It's based on some work that Wisdom Tree did, and Wisdom Tree looked at 5-year averages, taking the Standard & Poor's for every 5 years from 1871 until the current day. Now, one of the things I've talked about on the radio program is that if you take 1 penny and you double it every day, so it goes 1 cent, 2 cents, 4 cents, I've asked the question any number of times, at the end of 30 days, how much will you have? Think about that. 1 penny doubled every day. The amount doubled every day for a period of 30 years, or 30 days. The answer is over $10 million. But the reality is, half of that comes on the last day. 3/4 of that comes on the last 2 days. 90% in the last 4 days. When you look at the beginning of the curve, 1 penny, 2 pennies, 4 pennies, it looks like a straight line. It's not until you get to the end, in the last week of that time, maybe even the last 5 or 6 days, that you really see that the curve is really suddenly exploding upward. Most of the time, it looks like a straight line. So when you see somebody like Wisdom Tree, go back and take the data from 1871, 150 years ago, or almost 150 years ago, 1871, and give equal weight to that time. Say that that period of time is equal to what it is today. That's really underplaying what should be the result. You're looking at a period of time. If you look at 1982 to 2000, the market went from 1,000 to over 10,000. Actually went to 11,700. It increased almost 12 times from 1982 to 2000. It was a tremendous secular bull market. But you know what? That was only a 12.2% increase. On an annual basis, 12%. That's a lot more than going from 20,000 on the Dow to 30,000 by 2025. I've been talking about Dow 100,000. I can't tell you a year. I can't tell you when. Any more than I can tell you what day it's going to snow in Seattle. But I can tell you it probably will happen, that we'll have snow in Seattle. And at some point, we'll have 10,000. And I think it's going to come sooner than later. John Train wrote a book called The Money Masters, in which he said, I might say that there's no luck to professional portfolio investing. It's a craft. It involves thousands of decisions a year. You can no more pile up a superlative record by luck or accident than you can win a chess tournament by luck or accident. When I got into this business of managing money, I looked at the thousands of articles or hundreds of articles and books that were written and tried to figure out, everybody talked about making money, but I'm a mathematician, so I wanted to quantify it. I wanted to look at those people who could produce a 20% return over 25 years. And I found some. I didn't know if I would find hundreds or if I would find no one. But I did find several people who were able to do that. And the reason I chose 20% on 25 years is because that will take a $10,000 investment, and at the end of 25 years, turn it into $1 million. That's a significant change. If you look at 15% instead of 20%, it takes 10,000, turns it into 300,000. If you look at 10%, it takes 10,000 to 100,000. That's who were they? Well, stick around, because after the commercial break, I'll come back and talk about who they were and what they did.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Did you know the 20-year annualized S&P return was 8.19%, while the 20-year annualized return for the average equity mutual fund investor was just 4.67%? That's a gap of 3.52%. It doesn't sound like much now, but it could mean the difference between retiring in comfort and running out of money. For some seniors, a gap that large could cost them hundreds of thousands of dollars and cut their retirement short. Don't run out of money. Call Mike Adams of Adams Financial Concepts today, 206-903-1019, and learn more about how you can, 1, create wealth for retirement, and 2, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
KKOL.
We're back with more About Money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So when we left off at the break, I was talking about the number of articles that are written about how to make money. And I'm a mathematician, so I wanted to quantify it. I wanted to see who really did make a lot of money. And I set the criteria at 20% per year for 25 years. And there were some. There were very few. John Templeton, Warren Buffett, Roe Price, Philip Fisher, and Peter Lynch did it for 17 years, not 25, but he had such a track record for 17 years, I included him. And those were the masters which I really studied. It's not an easy kind of thing to do. But most financial advisors are accepting what goes on in their world. They look at the pyramid, they look at modern portfolio theory, they look at a 4% withdrawal rate. They have a set of rules, and they don't really look at being a master of the trade. I think to be a master, to understand what's going on, you have to understand what's going on in the world and what things are changing. I started to talk about the supercycle, about the change of companies, and that continues. There's an article out of The Economist this week talking about large multinational companies that are losing the momentum worldwide. Globalization. You know, the supercycle is talking about globalization. The third supercycle, driven by primarily the emerging countries. 93% of the world's middle class by 2020 will live in emerging countries. They're the ones that are buying our products. They're the ones that are consuming. They move from subsistence to consuming. That's what drives the supercycle. 25 years ago, the multinationals were getting into globalization. The Soviet Union was collapsing. China was opening up. You had the BRIC companies, Brazil, Russia, India, and China, opening up huge markets. It was a huge opportunity. Multinationals began to expand, and today they have 2% of the world's jobs. They have 50% of the world supply chains, 40% of the world's stock market values locked up in those multinationals. 80 million jobs they have, and over $1 trillion in revenues. You'd think everything was going right for them. But the fact is, things are changing. And what we're seeing is a change in the multinationals. The times are changing. Yum Brands, which owns KFC, their revenues are down 20%. McDonald's, their revenues overseas are down 40 or 29%. You know, I happen to do some business in the former Soviet Union countries. And I can remember in the mid or early 90s being in Moscow. And McDonald's opened a restaurant in Moscow. They had lines that were blocks long. It was really something. And they had some local citizens, nationalists, who opened a competing restaurant. You know, but they were not used to business. They weren't used to commerce. That restaurant closed between noon and 1 to give their employees a lunch break. You know, but they learned. They weren't stupid. They learned. And today, they compete very well with the McDonald's. That's happening around the world. Local companies are springing up to compete. Those companies are beginning to take away market share from the multinationals. If you look at the profits of the top 700 multinational companies, the profits have dropped 25% over the last 5 years. They're not growing, they're dropping. The domestic firms, on the other hand, are increasing during that period of time. If you look at the top 700 multinational companies, their foreign operations were earning an 18% return on equity a decade ago. Today it's down to 11. The bright spot, if there's any, it's the technology companies. 40% of the foreign profits now are earned by the technology companies. Of the probably the top 50 American technology companies earn 46% of the profits. And their profits, unlike most of the multinationals, their profits are up 17%. I talked about the blue chips in 1966 versus what is going on today. That is happening on a worldwide basis as well. I started the whole segment talking about Reading Minds and Markets by Jack Ablin. The most recent experience should not call into question why we invest in the market, but rather serve as a lesson that investing is not easy. Investing takes hard work, consistency, and objective. Today, that's ever so more true. It's a time of knowing what's going on and how to go along. Dalbar does a study, and the question I have for most investors is, would you rather have, after 30 years, $286,000 or $2.1 million? Dalbar does a study, and they found that the average mutual fund investor will grow over 30 years, and they're taking actual performance of all mutual fund investors, those who seek advice from a financial advisor and those who do it on their own. The average mutual fund investor over the last 30 years has grown 100,000 to 288,000. If just invested in the Standard & Poor's 500, that 100,000 over the last 30 years would have grown 2.1 million. It makes a huge difference to be ahead of the game, to be ahead of the market, to be ahead of the curve. And that's what this program is designed to let you, the listener, do, so that you're ahead and that you can enjoy higher, better returns. Returns do count. They do. So I want to shift. I want to introduce my guests today. I have two guests. From Festivals Inc., I have Jody May.
Good afternoon.
And Megan Postoglione.
Yes. Hi.
So welcome to the program.
Thank you.
So Jody, why don't we start with your background?
My background. I was born and raised in Los Angeles, California, but we moved up here in my teens. I'm a Washington State University Cougar with a degree in advertising. Very proud of that. And after college, instead of going into advertising, I had a career in retail, worked 8 years as a buyer for the Bon Marché, now Macy's. And during that time, my dad, who's been a restaurateur his entire life, decided he wanted to do some fun events, food festivals in particular. The Bite of Seattle, of course, is what I'm referring to. And I decided in 1988 to leave my retail career and join my dad and launch a festival business.
And you've done that.
And I have done that, and I'm still doing it.
So let's talk about the festivals that you do.
Our company, we've done many events over the years. The company was formed in 1982 when the first bite took place at Green Lake. But currently, we actually own 3 festivals that we produce, own and produce them. Taste of Tacoma, which is down at Point Defiance Park, the Bite of Seattle, of course, at Seattle Center, and our Oktoberfest Northwest event, which takes place at the Washington State Fairgrounds in Puyallup. And then in addition to that, we consult and do other projects when hired. So upcoming in February, our company will handle the operations and logistics for the Seattle Wine and Food Experience. And then we also sell sponsorship and oversee the media relationships for Kent Cornucopia Days, which is another large summer festival.
So let's talk a minute about the Bite of Seattle. Tell us what it is.
Okay.
Maybe there are some listeners who don't know or haven't been.
Absolutely. It'd be my pleasure. The Bite did start in 1982 in Green Lake. There was a recession in the 80s. And again, my father, who started the Bite back then, was a restaurateur and got all of his buddies together and said, the people aren't coming to us. We need to bring the food to them. So they launched the festival at Green Lake. And it was bigger success, I think, than he had ever imagined. The event moved to Seattle Center in 1986, which has been our home since. And it's basically a free community festival. We call it the Northwest Premier Food Festival, and it showcases over 60 restaurants and food product companies, lots of entertainment stages and music, which we've always felt food and entertainment go hand in hand. And it's really just a great summer festival, kind of like Camelot in the Park.
So, like, what kind of foods are we looking at? What kind of restaurants? Give us a few
Absolutely.
examples.
So, in the old days, for those that have been before, the lineup of restaurants was actually all brick and mortar restaurants. Some very great ones back in the day, Canlis and Rossellini's and Schwartz Brothers, etc. And as the event has evolved, we're going into our 35th year later, we have some restaurants such as Racha Thai and I'll think of some other names because my mind's a blank, but we also have some professional concessionaires at our event that do very unique things and have been in the event for a long time. A lot of our high-end restaurants come together in what we call the Alley, which is a Food Lifeline fundraiser, and that's where you'll see your high-end restaurants like Salty's and, John Howie and some of those types of establishments.
But you also have even some of the food trucks.
And we have food trucks because the Bite of Seattle is all about what's hip and cool, and right now food trucks are hot.
They are.
Yes.
And this happens once a year?
Right. It's always been the third weekend of July. My dad checked the almanac the first year, and that's where it's stuck ever since. And so it's third weekend of July every year.
So we'll come back in just a minute and hear about the other festivals and some things beyond that. Don't go away. We'll be right back.
More about money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I'm here with Jody May and Megan Postiglione from Festivals Inc. So we're talking about the Bite of Seattle, but you've moved on, and not only do the Bite of Seattle, you do other bites as well, or taste.
Correct. Actually, after the Bite of Seattle was such a success, we launched 5 years later the Taste of Tacoma, which is really sort of a smaller version out at Point Defiance Park, which is a beautiful park out in Tacoma. And it's a similar concept. A lot of the things we do at both festivals are very similar. And it's been very, very successful. It's going into its... What year, Megan?
33rd.
33rd year.
Mm-hmm.
So, yeah, we're cruising right along.
I've been to the Bite, but I haven't been to the Taste.
The Taste is a lot of times our summer interns that come on board each year, we do that event first, and it's kind of our training. We call it our training ground because it's the smaller one before they get to the Bite. But a lot of times it's their favorite because it reminds them of how the Bite really used to be at Green Lake, meaning the park is a little bit smaller. It's kind of that whole Camelot feeling, the picnic. So it's actually really lovely.
And so it's a smaller version.
Correct.
And when does it happen?
It happens the last weekend of June. So, every year.
It's June 23rd through the 25th this summer.
And the Bite is July?
July 21st through the 23rd.
Okay.
Yeah.
And then you do a third event.
Right. Going into its 13th year, this year in 2017, we do Oktoberfest Northwest, which is at the Washington State Fairgrounds down in Puyallup. And this event is actually really a good time. It's we pride ourselves. It's really the closest authentic Munich-style beer garden Oktoberfest event outside of what Leavenworth does in their Bavarian village and all of that. And we've got some special things that has made it our own, such as Hammerschlagen, which is a awesome game that we brought to the Northwest. And we have a tournament of champions, and it's very exciting. And this year we're going to have Beer Olympics. It's going to be really cool. And
so
it's,
tell us
it's really
about
a lot of fun.
Hammerschlagen and Beer Olympics.
Okay, so Hammerschlagen is a game where you have a tree stump on a table, and the people stand around it, and everybody puts one nail just gently into the stump, and you put one hand behind your back, and you hold a hammer in the other hand, and you tap the nail just once, and you go around the circle, to the right usually, and each person hammers in. The first person to make the nail hammered in flush with the top of the nail flat to the wood is the winner. And I know it sounds really, really simple and silly, but if you happen to be drinking beer at the same time, it could be quite challenging.
Well, and to add to that, I couldn't tell if you said or not, but it is the skinny part of the hammer. You're not using the bigger side.
Head.
So you use the back of it, and you can only do it in one swipe, like a swing of your arm, and that's your chance. And we do a bracket system. People come on Friday night for the first bracket, and then if the people that win come over for Saturday night to compete against the winners on Saturday. And it's this huge thing. People have come back years after years to compete with one another to top the Hammerschlagen tournament championship. It's very funny, very unique, and we're the official home of Hammerschlagen at Oktoberfest Northwest.
And the more you drink, the harder it is to hit the nail.
Some people say it actually helps them do better, but I guess it's really up to you.
Awesome. And so what is the other contest? Is the beer?
New this year, we're introducing a beer Olympics. It's going to be a series of games, and we're going to have prizes. And
Yeah, we are always trying to evolve and stay current and stay trendy. And with so many, just like our food events with Oktoberfest, there are increasingly more events similar to it. And to continue to stand out from those, we have to continue to evolve and add new things. So the Beer Olympics is just a new thing that we're adding this year. And this is like the first time we've actually talked about it. We're still working out the details of it, but it'll be a series of different events. Supposed to be on hopefully the Saturday of the event, and you can compete in teams, and Hammerschlagen will probably be part of it. You select, your best teammate, they go compete, and then we'll do a different competition and, that sort of thing. So kind of like the Olympics in the sense of there's teams and you send your best player for that one, and at the end you win some prizes, some beer steins and tickets and that sort of thing.
So my first impression is whoever drank the most, it's like the hot dog eating contest.
It could be, yeah.
Yes.
Basically, but, with German-style Bavarian games.
I think the most fun about Oktoberfest is that the staff, our entertainers, and even the guests who come to an Oktoberfest event, any type of Oktoberfest, but ours is really super great, with the mentality of just having a crazy time and being crazy and stepping out of who they really are before they step in the venue. You see everything from A to Z.
And so when is it?
It's October 6th through the 8th at the Washington State Fair Event Center in Puyallup. And one thing that has been cool, too, that we've gone into is we have the official Queen of Oktoberfest, who is 6'2" Austrian. She's called the Austrian Amazon, and she is a yodeling queen, basically. She's wonderful, from Austria, grew up learning that, and so she's our host and headliner, and she's been kind of a big part of it and continued to grow with our event. It's been very
Sounds
fun.
like it's a lot of fun.
It really is. It's sort of our big finale event for our company of the season, and it's good that one is kind of at the end, because it's quite a party.
So you do other events as well. You're hired to do other events.
Right. We've consulted over the years on many projects. People can hire us to do, take on an entire event or just aspects of it. So, for example, I mentioned that we do Kent Cornucopia Days, and Megan works with them to secure media sponsors, and we sell sponsorship for them for the Lions Club, who puts that on. And the proceeds of that event are very cool, actually. They provide eyeglasses to families and children and people who can afford them. So the project's very, very cool. And then this Seattle Wine and Food Experience, for example, we're going to be doing the operations and logistics for them. So we're helping them literally set up. We've created the maps pre-event, some of those kinds of logistical type things, and then on site we'll be there to support them and facilitate the event and production.
And that'll be at the Seattle Center?
That's at Seattle Center, February 23rd, I think, 24th.
It's a 3-day thing. It's Friday, Saturday, Sunday.
Right.
And is that to benefit the Seattle Center? Does it benefit?
That event is actually an event that supports La Dame. I might say it incorrectly, but it's La Dame. It's a women's chef organization, but it's actually it's a paid event to the public, and honestly, it's an amazing event in terms of value. You pay to go in and you sample food and wine and all kinds of different beverages. You have to be 21, but it's an amazing event to experience.
And when is that?
I believe it's
February 23rd, 24th is, I apologize, I may be one day off on that, but it's that weekend.
Okay.
It's that 20th weekend.
Right. Right.
Fascinating.
Yeah.
All this going on, all these festivals, places to go, things to do.
Absolutely. And we've done many, many things. Our company worked with Seafair for 6 years. We did the Earth Day celebration at Marymore Park in 1990. There's just a long list of projects that we've been very proud to do, Burien Strawberry Festival and others. So, we love what we do, and we're out there if people need help with their events.
So that brings me to the one last thing I want to ask. If someone wants to get a hold of you, they have an event they want to plan, they want to do, how would they do that?
They are welcome to call our office and speak to me personally or any of my staff at 425-295-3262. I'm on extension 119, and I'm happy to take any calls. And they can also email at JODYM, as in Mary, at festivals-inc.com. Or check out our websites, tasteoftacoma.com, biteofseattle.com, and Oktoberfest NW, and that's Oktoberfest with a K.com. And we have a Get Involved button, and you can communicate with us and send us any information.
Sounds great. Thanks for being on.
Thank you so much for having us. It's been great.
Lots of great things going on.
Thank you.
Absolutely. Summer's around the corner.
So I want to shift gears. We're coming to a commercial break, but before that, I want to give you just a hint of what's coming on. Elizabeth Warren, whether you like her, don't like her, whatever, she wrote a letter to 15 large annuity providers and said she had some real problems with the perks that they were giving to financial advisors. They were giving huge rings like NFL Super Bowl rings. They were giving cruises and parties. And she had some real problems as to whether that was a conflict of interest and who was paying for it, because the people who were buying annuities were paying for that. And she had some real questions, high surrender charges, high fees. So what about annuities? Those are things that are supposedly safe and you can't go wrong, right? I think they're like chocolate-covered hand grenades. And we're going to talk about annuities right after this commercial break that's coming up. What are annuities? Who benefits annuities? Who should have annuities? There's a whole lot of them that are sold, and they're sold, I think, for the wrong reasons for most people. Helen Olin wrote a book called Pound Foolish, exposing the dark side of the finance industry. We're going to talk about that right after the commercial break. Don't go away.
Stay tuned. About Money returns in a moment with Mike Adams here on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
How do you picture retirement? House on the beach, small farm in the country, traveling the world with your spouse. The one thing you don't picture is running out of money. Retirement dreams are shattered all too often by poor investment choices, sending many retirees back to work. If you think the job market is tough now, try entering it after you've retired. Don't run out of money. Start planning now. Call Mike Adams of Adams Financial Concepts today at 206-903-1019 and learn more about how you can create wealth for retirement and, probably most importantly, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So I started to talk just before the break, give a little hint of what was coming, and I want to talk about annuities. Helen Olin wrote a book, Pound Foolish, Exposing the Dark Side of the Finance Industry. And she says there's two things you need to know about annuities. The first is that they're increasingly sold to baby boomers worried about running out of money. And secondly, they're so complicated, they're so difficult to understand, there's so many financial generalities that they're very seldom in the client's best interest. And I want to add a third that she didn't mention. If this secular bull market that we're in now, this one that's taken us from 6,600 to 20,000, Barron's is forecasting 30,000. I'm forecasting it's going to be beyond that. If this secular bull market ends as I think the highest probability is to end, in a period of stagflation or inflation, stagflation like the 1970s, where you had an economy that was still growing, but where inflation reached double digits, where treasury values reached into the 14, 15, 16%. If we end like that, the guaranteed incomes are going to be just that. Guaranteed incomes with the principal not going up and the purchasing value going down. 5% of $1 million is $50,000 a year. Even if you get 7%, that's an increase of 40%. But if prices are going up as they did in the 1970s, if you lived through that period of time, you'll know what that is. And if you haven't lived through that period of time, when you're seeing prices increase 15 and 20% a year, and your income is not going up but a few percent a year, you get the squeeze. But back to what Helen Olin said, and she mentioned that even Susie Orman, who, by the way, is not one of my favorites, and I don't agree with a lot of what she says, but even Susie Orman and many experts say annuities are not for the large majority of people. Annuities are sold for one and only one reason. That's what Ellen Olin says. That's what Susie Orman says. That's what I say. For one and only one reason, and that's to make money for financial advisors. Rarely is it in the best interest of clients. And yes, there are some for whom it's a good fit. I recommend it to a relative that they do an annuity. These are relatives that inherited some money. They went through the money within a year. They inherited some more money. I recommended an annuity so that they would at least have some income in retirement. But annuities are a hard sale. Financial advisors are highly rewarded. Some agents earn as much as 14%. And commissions of 8 to 10% are typical of what financial advisors earn on annuities. And they're very complicated. You can buy inflation protection, shorter surrender periods, guaranteed income if the market falls. You can get a guarantee of an income charge, inflation charge. It costs you 1.96%. And 96% of annuities are sold with average bells and whistles. And the additional cost is 1.3%, 1.03% more taken off your return. So that means if the market is up 7%, the annuity will be up only 3.49%. If the market is up 5%, the annuity is only going to be up 1.5%. It takes away from the return to the person that owns the annuities. And there's no such thing as a free lunch. No such thing. Most annuities are sold at free seminars, and almost always, there's the same pattern. Securities and Exchange Commission says that over half the flyers are misleading. It says that they're low risk. That's wrong. It says and they're based on creating fear. 9% of people who attend those seminars will end up buying annuities. And the pattern's almost always the same. It's scripted. It's actually scripted. The idea is to use fear, make them sweat a little. Make them sweat a little. Make them scared. Pose a problem. At the same time, you pose a big problem. 2008, talk about the people that were suffering in 2008. Talk about the people that ran out of money. Talk about the people. You prey on the fear, and then you pose the solution. And the solution is an annuity. All you have to do is buy this. And they don't use the word annuity. They say, this is the solution, guaranteed income. You can have this income. You don't have to worry about it for the rest of your life. You can just put this money away, and you're going to have that income no matter what happens in the stock market, no matter what happens in the economy. The idea is to press the hot button. Will your retirement survive the economic meltdown? Because it's an economic meltdown that you have to worry about. You know, it'll usually have 20 or 25 slides, and it talks about how you can be sure that you're not going to run out of money. 47% of Americans will run out of funds if they retire at age 65. They talk about that. 47% of Americans. Don't be one of those. You know, the sales pitch is for the annuity. The person who benefits the most is the financial advisor. And seniors are the target group, or baby boomers. 20% have inappropriate investments or pay significantly higher fees. And they're always told that there's a guarantee that insurance companies don't go broke. We've heard that. The problem is, insurance companies have gone broke. Executive Life was the largest in California in 1991. The state had to take it over because it went broke. First Capital Life invested in junk bonds. They were taken over. Mutual Benefit Life, it was a shock. It was a conservative. It was a blue chip. It was solid. It was A-plus rated. Mutual Benefit Life filed for bankruptcy. The payments were frozen. You could only get your money out under extreme hardship. And yes, it was guaranteed. And yes, people eventually got their money. But it was a lower amount, and it took a longer time. Sometimes 1 or 2% interest, and delayed for 4 years. They're chocolate-covered hand grenades. They're chocolate-covered hand grenades because they look so good. They sound so good. They sound like they take care of the issues so that you don't have to worry. But for me, I think there's very, very few cases where they're really appropriate. Most of the time, it's explosive. It's a dangerous thing. And if we go into a period of inflation, the value of that annuity will shrink dramatically. And once you're locked in, you have large fees to surrender. Most carry a 10-year surrender period, and anywhere from 7 to 10%, because they have to earn back that money that they paid to the financial advisor. The biggest benefit to the financial advisors and to the companies that sell them. That's where this all boils down to. So if you're faced with this, if you're invited to a seminar on annuities, run the other way. It's not a good investment. The only time it's a good investment is if you can't hold on to money, and if you have a chunk of money and you'll go through it in a year or 2 years, it's probably the right thing to do. But otherwise, if you have investments, it makes no sense. Join me next week. I'll be back for another program, and we'll be talking about money then too. Have a great week and weekend. I'm out, and so will you. Bye.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on AdamsFinancialConcepts.com. That's AdamsFinancialConcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again for more About Money with Mike Adams here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's Adams Financial Concepts.